0.75% for both the federal funds target rate as well as the discount rate, cut 0.75%. The Federal Open Market Committee decided today to lower its target for the federal funds rate 0.75% to 2.25%. Recent information indicates that the outlook for economic activity has weakened further. Growth in consumer spending has slowed and labor markets have softened. Financial markets remain under considerable stress, and the tightening of credit conditions and the deepening of the housing contraction are likely to weigh on economic growth over the next few quarters. Inflation has been elevated, and some indicators of inflation expectations have risen. The committee expects inflation to moderate in coming quarters, reflecting a projected leveling out of energy and other commodity prices and an easing of pressures on resource utilization. Still, uncertainty about the inflation outlook has increased. It will be necessary to continue to monitor inflation developments carefully. Today's policy action, combined with those taken earlier, including measures to foster market liquidity, should help to promote moderate growth over time and to mitigate the risks to economic activity. However, downside risks to growth remain. The committee will act in a timely manner as needed to promote sustainable economic growth and price stability. Only 2 FOMC voting members voted against this. They were Richard Fisher and Charles Plosser, who wanted less aggressive action at this meeting. They are both known to be inflation hawks. In a related action, the Board of Governors unanimously approved a 0.75 percentage point decrease in the discount rate to 2.5%. This is Adam Shapiro reporting live from the Treasury.
And the market pulls back on the news that they did not get what they were hoping from the Federal Reserve. The expectation was for a cut of a full point. The market had been up 300 points, now still up about 221 points, but we now stand at 2.25%. Gerald O'Driscoll, somebody is speaking your language at the Federal Reserve, now worried a bit more about inflation. What do you think?
Yes, the inflation hawks, and I'm not surprised it was Fisher and Plosser that are leading inflation hawks, probably pushed back hard. And then the Fed decided that in the language to signal that if more cuts were needed, they would do it. So they're trying to please both sides of this debate.
Clearly, this was a compromise between the two dissenters and the general expectation for a full point. And in a collegial kind of FOMC that Ben Bernanke runs, that's what you would expect. But this is clearly a compromise.
Neil, what do you make of that? Because, again, Fisher and Plosser wanted less aggressive action.
Right. But they all wanted rates cut, so the only degree was by how much. What's interesting, too, is I liken it to your kids if they're expecting 2 bicycles at Christmas, right? And they only get 1. And they're whining about the 1, all right? 0.75 point is a huge cut. But if your expectation was for a full percentage point, you know,
let's get down to Phil Flynn for a second. Phil, what's the floor like right now?
Total shock right now. I'm telling you that. You know, usually when you get these kind of announcements, you can hear the reaction immediately. And I think there was a lot of shock in the market that they got 0.75 point. Obviously, that's why you got the big move in the Dow. But I'll tell you this, in a weird way, this is probably the best news you can get if you're a stock market player. I think that a lot of traders are going to look at this decision by not getting that full point and say, hey, wait a second here. You know, things were so bleak on Sunday night and over the weekend with the Bear Stearns thing. Now, all of a sudden, the Fed doesn't cut rates as aggressively as most thought they would. Maybe the Fed feels that maybe they've got their hands around this crisis a little bit. And even though we initially got that disappointment, maybe later in the day we can turn this whole thing around. This might be a good buy opportunity.
Maybe, guys, they're just looking at the fact 2.25 isn't a hell of a lot to go to 0.
Well,
so we need some ammunition, something in our arsenal, just in case. Yeah, maybe.
Yeah, Neil's right. He's right.
Yeah. Gerald, do you want to weigh in here, other than agreeing with the big boss man here?
I think that I don't think that Plosser and Fisher are probably alone. They're just alone in being willing to dissent and be aggressive. I think anybody that's been around as long as some of those people on the FOMC have been around have got to begin to be concerned.
But, you know, let's face it.
I think they know that they're handling the really bad part of it through the discount window. That's where the resolution of this problem is going to be, is that and I credit them for some of the imaginative things they've done in terms of the lending through the discount window.
We want to bring Peter Schiff in here because, again, that's what a lot of people are saying. It's the imaginative works of the Federal Reserve, not cutting short-term interest rates, but what they did with the discount window.
Well,
it's going to work magic here.
First of all, it's ridiculous. Somebody is saying a 75 basis point rate hike is hawkish. It shows how much lower we've set the bar here. Actually, Ben Bernanke is giving Alan Greenspan a run for his money in the race to be the worst Fed chairman in U.S. history. He should be raising interest rates. He should not be cutting them. The dollar is falling through the floor. Look what's happening to prices around the world. This is irresponsible. We cannot do this. The cost that we're going to bear from this...
Wait, but you don't think that a financial panic would be deflationary?
No, what they're doing is creating inflation. It's not a panic.
No, but they're trying to... Right. I mean, don't you think that what we're seeing right now would be
No, I think it would be better if we just bit the bullet, let these assets fall in value. They're overpriced, save the dollar, let the chips fall where they may, and work on a real reform.
Hold on.
Not just try to sweep it under the rug.
Hold on.